Hi, I'm Evaldo Albuquerque, editor of FX Breakout Alert. Today we're going to take a look at gold, and we are looking at a weekly chart going back to 2008. Notice that gold has been in an uptrend, and it has always found support in this trend line, meaning every time gold had a correction and touched this line, there were buyers jumping in, pushing the price of gold higher. You can see how there was a gold correction and then buyers jumped in, buying gold and pushing the price of gold higher. It happened here, here, here again, and late last year. But now you can notice that gold, and remember this is a weekly chart, so each candle represents the price action of a week. So notice that gold is having a really bad week and is now trading below that trend line. So if gold closes this week below the trend line, that will be a violation of the trend line, which is bad news for gold. So gold may be in big trouble here if it closes below that trend line. Another chart that I'm watching is GDX. So let's take a look. GDX is a basket of mining companies, and you can see here, based on the chart, gold stocks are also in trouble. And we're also looking at a weekly chart, and GDX now has just formed a head and shoulders formation, and that's a bearish pattern that indicates that the uptrend is turning into a downtrend. And this is a complex head and shoulders because there are two shoulders, one head and two right shoulders. And notice how now the price is trading below the neckline, and that's what confirms the head and shoulders, and that indicates the price will move much lower. If it closes below the neckline, we have to wait until the end of the week to see if the price will close below the neckline, but so far it's not looking good for gold stocks. If we can confirm the head and shoulders according to this formation, this ETF GDX could drop 30% in the next weeks, because you can measure the distance between the top of the head and the neckline to project the target for the price. So based on that distance, this ETF GDX could drop 30% in the next weeks. So how can you use that information in the forex market? Well, if gold and gold stocks are in trouble, that means that we're probably going to see a strong dollar, especially against commodity currencies. So let's take a look at a couple of examples. Let's take a look at Aussie, and let's look at a daily chart. So you can see here now how the Australian dollar is basically collapsed in the last few days, especially now with gold and gold stocks moving lower. That indicates that the Aussie has more downside risk here, and it's very possible that the Aussie will be trading below parity in a few weeks. Another commodity currency that's in trouble is the South Africa Rand. So let's take a look at the pair USD ZAR, and we're going to look at the daily chart, and you can see now that the pair has just violated a downtrend, which means that the dollar is rallying against the South Africa Rand. In my FX Breakout Alert research advisory, we're actually shorting the South African Rand against the Japanese yen, and right now we are up by more than 20%. So I expect the Australian dollar, the South African Rand, to weaken in the next few weeks. If you'd like to know more about FX Breakout Alert, please see the link below. Thanks for watching.